Hello and welcome, I am James Palla and this is my fine wine market update for July 2016. I'm sure you've been watching the UK voted out the Eurozone, which caused chaos in the global stock markets. And why did we have such turmoil in the financial markets? Since they've only made a vote, there haven't been any changes yet, and we have 2 years of listening to the Brexit exit, so get ready to hear this for every single angle of this story. In the wine investing world, we've been having an amazing time. All the smart investors are buying fine wine. Market's been doing really well. Now it's doing even better, with the June 2016 being the 6th month of increase for the wine market, according to the data from the London Vintners Exchange. And the pace is really picking up. Investors are maximising not just on the growth of the market, but also taking advantage of the low pound and the low euro dollar. So it's a great opportunity to improve the returns in your portfolio right now. A lot of the smart investors have been bailing out of the stock market for the last 8 months since October 2015, and investing trends are moving to safer investments like fine wine. We have seen amazing growth on many of the first growth vintages as well, especially the Bordeaux's. In February this year, Angelus 2006 went up 9% in just 1 month, which is phenomenal growth for 1 month for a fine wine. In March, Angelus went up 8%, the 2007 vintage, which again was a very good jump. And in April, Mouton 2007 went up 12%. In May, Latour 2006 went up 10%, another first growth Bordeaux. And in June, Mouton 1989 went up 13%. Now, our recent article about the En Primeur release prices. En Primeur is when the Chateau release prices for the latest vintage. Lafite Rothschild released 48% higher than last year's vintage. Mouton, Margaux and Haut-Brion all released the 2015 vintage higher by 60% compared to last year's 2014 vintage. It's absolutely amazing. The market's going crazy for the older vintages. I've been focusing on looking at the older vintages since last year, and I'm constantly searching for the best deals I can find. I was getting below market value, but it's virtually impossible right now. Some merchants are even selling stock over the market price. So if you're lucky, you can find 1 or 2 cases at a lower price. The rest is about 5 to 10% higher. This makes our research slightly more difficult, but it's okay. I'm always focused on buying at the best price for you. I really want to take the advantage of this growth in the market this year. If you're in a position to build your portfolio, the timing's perfect for you to make some fantastic gains. 2 years from now, if you don't buy anything for your wine portfolio, you'll be kicking yourself. This is the Bordeaux 2015 release prices and the change compared to last year. If you look at the percentage difference, looking at the right and left bank wines, you can see the difference. If you just compare Michon, Haut-Brion with a 110% increase from last year, and then some only slightly increased, but majority in the middle of the range. If you look at wines like Du Cru, Bocayou, Mouton Rothschild was a 60% increase, Margaux was a 60% increase, so was Haut-Brion. Really the chateaux are taking advantage of these price increases. If you look at this chart here, you can see the fine wine 50 market, and then the USD versus the GBP, the currency market, and you can see such a volatile market the currency has been in, yet you can just see pure growth since January 2016 right the way up through June 2016 for the fine wine 50 index, which is the London Vintners top 50 performing fine wines. Here you can compare all of the some of the major indices like the FTSE 100, the DAX, the CAC 40 in France, the gold as a commodity, of course, and then the live London Vintners Exchange Fine Wine Index 50. Again, the same as index that I showed you on the previous chart, and you can see how stable this market is. And of course, gold picking up here, which is also a sign that markets may be deteriorating. Now, the global economy is heading into a 2-year recession at the current pace that it's at. Brexit vote was really a smokescreen. The vote has changed nothing because the UK have 2 years to make their exit. It's actually the markets and confidence levels that have been deteriorating for many months now. Eventually the cracks of the stock market decline will start to appear and have an impact on the economy. Data coming out of the US and European economy is sluggish. There are a few countries showing only signs of growth. We have been seeing countries lower their interest rates, yet we haven't seen an official collapse of any particular market yet. We haven't had any really bad news. Oil went down because of a glut, but that was the only real negative that we saw. The economy data is actually scary. If you look at how companies are financing the purchases of their own shares by financing from the bank on virtually zero interest rates, the bubble will eventually burst. And this is why we're going to continue to see amazing growth in the wine market for the next 2 to 3 years. A lot of potential in the older vintages, especially now that we've seen the latest prices of the 2015 vintages.